Right. Sir, in this video, I'll explain whether a new bond is required when a firm is converted into LLP. Right. I have gathered certain provisions which are relevant to this question. Upon conversion of firm into LLP, whether really a new PAN is required or not. So first main important provision is LLP Act 2008, second schedule para 7 clause C. So what this second schedule para 7 clause C says? This is second schedule para 7 clause C. On and from the date of registration specified in the certificate of registration, the firm shall be deemed to be dissolved. That means the old entity called as partnership firm is closed legally. The firm stands dissolved. Therefore, obviously, in LLP, conversion of firm into LLP is nothing but closing the old entity and creating a new entity. You cannot simply call it, even though the word conversion is used, we cannot say that same entity is continuing. No, old entity is closed and new entity is created. That is one thing. So this supports obtaining new PAN is required. The firm shall be stand dissolved. Okay, that is one provision. Right. Next, another provision is Rule 158 of Income Tax Rules 2026. So if you observe the old provisions for applying the PAN, right? I have given this. This is the comparison of the rules, old rules and new rules relating to allotment of PAN. Old rule 144 and new rule 158 for application of PAN. If you look at the old rule for application of PAN, they have given here firm include limited liability partnership. While applying for a PAN, which documents are required? Firm include limited liability partnership. So they have combined both firm and LLP while applying for PAN. This is old rules as per Income Tax Rules 1962. But now look at the side. This side second column is new rules. Okay, in the new rules 158. In the new rules 158, rule 8, they have segregated firm and partnership separately. Rule 158, sub rule 8 clause B. Look at this here. Limited liability partnership and firm they have separated. Firm other than limited liability partnership. And third point is limited liability partnership. Now in the new Income Tax Rules 1962, while applying for PAN, they have given separate rules for firm and LLP. Though old provisions are firm includes LLP, same kind of this thing. Here they have segregated. This is also one thing which supports new PAN is required when the firm is converted into LLP. Another most important thing is section 331 of the Income Tax Act 2025. So this 331 of the Income Tax Act 2025, similar to private companies also, what this provision says, if the income tax department is unable to recover tax dues from the LLP, they can recover from the partners of the LLP. The income tax department is unable to recover the tax dues from the LLP, they can recover dues from the partners of the LLP. However, unless he proves that non-recovery cannot be attributed to gross negligence, misfeasance, or breach of duty. That means if the reason for not recovering tax dues from the LLP is not the negligence of any partner, it's a normal business losses, then we cannot recover tax dues from the partners of the LLP. That is what their limited liability protection, both given to private limited companies, the limited liability companies as private limited companies as well as to LLP. The same provision, private limited companies as well as LLP, the same provision. This protection will not be available for partnership firm. Partnership firm partners are liable. There is no question of negligence or negligence liable, not negligence, not liable. There is no question like that. Partnership firm, unlimited liability to the partners. Firm and partners are not two separate entities, but this protection is given to LLP. So this based on this provision also, we can say that firm and LLP are altogether different entities, even though some common provisions are there. So this is where the normal confusion will arise. So there are many provisions. Category 1, there are many provisions which apply to both firm as well as to LLP. We should not stick on to category 1 only, and we should say that based on category 1 only, we cannot conclude that firm and LLP are one and the same, therefore same entity is continuing, new PAN is not required. That argument may not hold in my opinion. In my opinion, that argument may not hold, because though category 1 is like that, but there are many cases, category 2 cases, some provisions apply only to firm but not to LLP. Category 3, some provisions apply to only LLP but not to firm. Some provisions apply only to LLP but not to firm. So therefore, just because many provisions are applicable to both firm and LLP, it is not correct to equate that firm is equal to LLP. Accordingly, same entity is continuing, new PAN is not required. That argument may not hold in my opinion. Okay, look at the, if you look at the provisions of Act Income Tax Act 2025. So this is where some people here argue. Some people who argues that new PAN is not required when a partnership firm is converted into LLP or not. Their argument may be based on this section 2 clause 77, which defines the definition of person. Person includes an individual, a company, firm. So here LLP is not given separately. LLP is nothing but firm only. Firm includes LLP. That's what another definition. That's what another definition says. Firm includes LLP, but it is not vice versa. Firm and LLP is not one and the same. Firm shall have the same meaning and shall include an LLP. Okay, so some people who are argue that firm and LLP are same, therefore PAN is not required. They may be using, they can take the support of these two provisions. In the definition of the person, LLP separate category is not given, and moreover, in the definition of the firm, they said firm shall include a LLP. But here firm includes an LLP, not LLP includes firm, vice versa. Therefore, firm is a broad category. Within that, LLP is some minor category. Sometimes provisions are applicable to whole category. Sometimes provisions are not applicable to LLP. And moreover, whatever the definitions we are discussing in section 45, those are general definitions. Based on the situation, we need to deviate from the definitions. Look at section 2 at beginning, what section 2 beginning says. In this act, unless the context otherwise requires. Unless the context otherwise requires. That means though the firm includes LLP, in some cases we cannot follow that definition. We have to segregate firm into LLP. We have to separate firm from the LLP. Okay, right. So look at this. I'll use separate provisions. So this is firm and LLP. This one of the provision where block of assets is transferred by a private company or unlisted public company to a limited liability partnership firm. This is applicable only to LLP, not to the partnership firm. This is what a category 3 provisions have given. Category 3 provisions, some of from provisions apply to only LLP but not to firm. Okay, so this provision you cannot apply to the firm. Firm includes LLP. It's not that LLP includes firm. Okay, that is one thing. Next. Other thing, somewhere eligible business we see. Look at this. This is specified business organization. This is also conversion of private company or unlimited public company to a limited liability partnership firm, not conversion of a private company to firm. Look at this eligible assessee here in one of the section. Which section is this? Section 58. Presumptive provision, section 58. Look at this eligible provisions. They said eligible assessees means an individual Hindu undivided family or a firm other than a limited liability partnership. Therefore, here eligible assessee is a firm but not LLP. Eligible assessee is a firm but not LLP. That is category 2 provisions. Some provisions apply only to firm but not to LLP. Therefore, so even though category 1 is there, many provisions which are applicable to firm also applies to LLP, but that doesn't mean that firm is equal to LLP and both are same entities when partnership firm is converted into LLP. No. So this is the basic provision here. LLP Act second schedule para 7 class C. Okay, when the partnership firm is converted into LLP, the firm is dissolved altogether. The firm is dissolved altogether. You have to forget about the old entity. You came across a new entity. You have created a new entity. Accordingly, you have to apply for the new PAN, LLP Act. And how to apply for the new PAN? What are the documents supporting for new PAN? Rule 158 of income tax rules. And to take this protection also. If I'm continuing as a partnership firm, if in my PAN the old partnership firm status will reflect, then how can I take the benefit of this? If the income tax department is unable to recover the tax dues from the LLP, partners cannot take benefit of this provision if the PAN status reflects firm only. Okay, right. That is the reason. So the conclusion is that, so in my opinion, when the partnership firm is converted into LLP, whether new for whether a new PAN is required, answer is yes. In my opinion, these are the justification I am using for my conclusion that when a partnership firm is converted into LP, new PAN is required. This is my conclusion. So I am open for interpretations. Okay, thank you.